Welcome to the deep dive. Today we've got a stack of material looking into how digital banking products get built. And specifically, we're focusing on something called white label banking platforms, our mission. To really unpack this, pull out the key takeaways from the sources and figure out what actually makes a digital banking app feel great for you, the user. So let's jump right in. Maybe you could give us a quick overview. What exactly are these white label banking platforms and why are banks, interested in them?
Sure. So basically, white label platforms are pre-built digital solutions. Think of them as ready-to-go software foundations. A bank or a fintech licenses this base, and then they put their own brand, their look and feel on top. The big appeal is definitely speed and efficiency. You can get a digital product out the door much, much faster than if you built it all from scratch. And the material really highlights this. The market's growing, like over 10% compound annual growth expected through 2028. They provide a really strong starting point, especially if you need to launch pretty standard offerings quickly.
Okay, right. So if you've ever used a banking app and maybe thought, this feels kind of similar to that other one, or just wondered how companies launch digital stuff so fast, well, this dive is probably for you. We're looking at the approach and, importantly, the trade-offs involved here.
Exactly. And that's a key point from the sources. While, yes, white label give you that speed, that initial cost effectiveness, it's not a magic bullet. Just using one doesn't automatically mean you'll get a 5-star app or a truly unique experience. There's some pretty significant challenges, often described as hidden risks.
Okay, hidden risks. We'll definitely get to those. But first, let's look at the good news. What are the main benefits, the material highlights for using these white label solutions?
Right, the benefits are pretty clear-cut, according to the sources. First, like we said, quick to market and cost effective. You launch fast, avoid huge upfront development costs, great for jumping on opportunities. Second, reduce technical risks. The third-party vendor handles the core development, the maintenance, updates, fixing errors, security, compliance.
That sounds like a big deal.
It is. It lets the internal teams focus elsewhere. Third, there's usually some quick customization possible, at least at the UI level. Simple things, changing colors, adding your logo. But the material does warn this is often quite limited.
Okay.
Fourth, you tap into their expertise. These vendors know banking tech, IT, compliance, user testing. That's really valuable, especially in a complex, regulated field like finance.
Sure.
And finally, it leads to streamlined operations. You delegate hosting, compliance, updates, so your own people can focus on strategy, marketing, customer engagement, the core business stuff.
Okay, yeah, that list sounds pretty compelling. Fast, cheaper, less technical headache. So where does the material say it starts to get tricky? If it offers all that, why isn't it just the default way to get a top-rated app?
Yeah, this is where that iceberg analogy comes in from one of the sources. The benefits, they're visible above the water.
Yeah.
But underneath, there are these significant risks. And the core issue really comes down to the fact that it's a platform built for lots of different clients. Using the same base as your competitors, well, it can easily lead to a kind of one-size-fits-all feel. It makes it hard for your bank's unique identity to really shine through.
Right, like that analogy in One Piece, multiple car brands just sticking their badge on the same basic car model. Okay, let's unpack those specific hidden risks they mentioned. What's the first one?
Absolutely. The first big one is misalignment to brand. Because these platforms are designed for a broad audience, they often just don't have the built-in flexibility to truly capture your specific brand's values or personality, beyond the basics like logos and colors. This makes it really tough to craft a distinct, cohesive brand experience that actually connects with your target users.
And the impact of that?
Well, strategically, you risk a fragmented brand feel. Your identity gets diluted, less memorable, and it can even erode trust, right? If the digital experience doesn't quite match the brand promise you're making everywhere else.
Yeah, I can see that.
There was a good example in the material about a U.S. retail bank. They worked with UXDA specifically to make sure their new white label platform actually felt like their brand. They used something called user journey mapping, basically plotting out how a user interacts with the app step by step to see where the standard platform flow didn't match their desired experience.
Okay.
This helped them find the critical gaps and then work with the vendor to find solutions or compromises. It shows it's possible, but it definitely takes deliberate effort.
So it's not just the visual skin, it's the whole flow, the whole feeling needing to align. Makes sense. What's the next risk?
That leads nicely into platform restrictions. These white label systems, they're often built with quite rigid technical architectures. They prioritize stability, which is good, but it means they really limit how much you can tailor specific functions or user flows in a unique way. I ought to add a custom feature, or even just change a standard process slightly.
Mm-hmm.
That often takes a lot of resources, time, and you usually need vendor approval, which isn't always easy to get.
Mm-hmm.
What gets marketed as extensive customization can often just be tweaking the appearance, not the core functionality.
So the strategic hit there is...
Well, it really slows down your agility. It's hard to react quickly to market shifts or roll out new cool features. Your operational costs can actually creep up over time because even small changes become complex projects.
Mm.
And importantly, it can hurt customer satisfaction and trust if the platform just can't deliver what your users expect or what you've promised them.
Right.
The material mentioned a U.S. Fintech that found their white label platform was super locked down,
Yeah.
basically just color changes allowed. They brought in UXDA, who first mapped out the platform's existing design system, like all the pre-built buttons, menus, etc. By understanding those building blocks, they could then design a custom UI library that cleverly integrated with those locked modules. It resulted in a cohesive look and feel, even with the limitations. So working smartly within constraints is key.
So you're really kind of handcuffed to what the vendor built and what they plan to build next.
Okay.
That sounds like it could directly impact how well you compete.
Exactly. Which brings us straight to the third risk, competitive stagnation.
Ah.
Look, if you're using the same basic engine as your competitors and you can't customize it much, how do you stand out? Your digital products risk looking, feeling, and working pretty much the same.
Yeah.
Plus, you become totally dependent on your vendor to add the next big thing, whether that's buy now, pay later, AI chatbots, maybe facial recognition for login.
Mm-hmm.
If they don't prioritize it for their broad client base, you just fall behind competitors who maybe built their own tech or picked a more flexible platform.
And strategically, that means...
It chips away at your perceived value.
Yeah.
You might end up spending more on marketing just trying to explain tiny differences.
Right.
It definitely diminishes your competitive edge, makes it harder to win or keep customers. And you risk losing customers, frankly, if they can get a more innovative or personalized experience somewhere else.
Makes sense.
There was an interesting case study about a Tanzanian bank. They were using a white label solution, but really wanted to position themselves as a leader by highlighting what made them unique. They worked with UXDA to map out an ideal user journey that specifically showcased the bank's unique advantages. Then they analyzed the vendor platform's limits against that ideal journey and strategically aligned their design vision to really hammer home their value proposition. It shows you can use design and strategy on top of the white label base to differentiate. But again, it takes focus.
That's a great point. If everyone's got similar tools, it really comes down to how smartly you use them and what you layer on top.
Okay, what was the final hidden risk mentioned?
The last big one was vendor availability and delays. Think about it. These vendors are juggling multiple clients. Your request, your needed update, it might just sit in their queue for a while.
Even if they assign a team, that team might not be 100% dedicated just to you. And maybe most importantly, the vendor's development roadmap. It's built to serve the needs of their entire client base, which might not line up with your specific urgent business priorities at all.
So that throws a wrench in your plans.
Big time. It can totally disrupt your project timelines, inflate costs if things drag on. It hinders your ability to hit market deadlines, which obviously impacts competitiveness. Your own innovation plans can get stalled if they don't match the vendor's roadmap. And you might find the vendor is prioritizing features that don't really add much value to your specific product, leading to wasted effort or inefficiencies.
Wow.
Yeah, there was this anecdote about a fintech from Mauritius. They were getting a lot of pushback from their outsourced team, who kept blaming the white label platform's limits. UXDA, working alongside them, actually stepped up communication with the white label vendors team. They didn't just take no for an answer, they challenged them, pushed them to explore possibilities, offered support to find alternative ways to implement things.
Ah, interesting approach.
Yeah, and that collaborative push, that determination, apparently helped turn those constraints into opportunities. They ended up delivering an award-winning product. It really shows that active partnership and sometimes needing to push your vendor is crucial.
Wow. Okay, so putting it all together, it sounds like that initial appeal of white label, the speed, the lower upfront cost, it comes with some potentially serious baggage if you're not careful. You risk looking generic, getting stuck with features you can't change, and being really dependent on someone else's schedule and priorities.
Yes, that's definitely a major takeaway from all this material. The white label gives you that technical foundation, that starting block, but it often just doesn't have the deep flexibility needed for true personalization or differentiation baked in. Customization on top of it is usually needed and often possible, but like we've seen, that adds complexity. It needs dedicated resources, time, and really good collaboration between everyone involved, the bank, the vendor, maybe outside experts. It's definitely a strategic balancing act. It's not just plug and play.
Right. So, given all these potential traps, how does the material suggest businesses should approach this? How do you make the decision and then manage the challenges if you do go with white label? What are the key strategic points?
Yeah, the material lays out a few critical strategic takeaways. First, define your priorities right at the start. Be brutally honest, is getting to market super fast the absolute #1 goal? Or is long-term differentiation, building that unique brand experience, just as important, or maybe more so? Because if differentiation is really key, then how flexible the vendor is becomes a critical factor in your choice.
Okay.
Second, account for white label constraints in your actual planning. You have to accept that the platform will have limits. That means you need to budget extra resources, money, and people for that customization work or for managing the vendor relationship closely. This can eat into those initial cost savings, so you need to plan for it. Third, engage in early collaboration. Get everyone in the room, early UX people, developers, business folks, ideally the vendor too. This early alignment helps make sure goals are realistic, you check technical feasibility up front, and you hopefully avoid costly changes later on. Good communication lets you make adjustments as you go.
Makes sense.
Fourth, future-proof your platform. As much as you can, design and implement your solution thinking about scalability and adaptability. You want the platform to be able to grow and change with the market, with user expectations, with new tech, without needing a massive, expensive overhaul down the road.
Right.
And finally, leverage expert support. Partnering with people who really specialize in digital product strategy and design, especially in finance, can be incredibly helpful. They can help you assess your goals against what a platform can realistically do, navigate those risks we talked about, and even spot opportunities for innovation within the white label structure.
So, the real message here seems to be, it's not just about picking the platform. It's all about the strategy you wrap around it. It's how carefully you integrate it, how much you invest in that smart customization and ongoing collaboration to make it genuinely yours and to sidestep those hidden dangers.
Exactly right. Success, even when you start with white label, seems to hinge on precision in your strategy, planning for that scalability, and keeping a laser focus on user-centric innovation. Having a strategic partner who gets these nuances can really help guide those crucial decisions and steer you away from the common pitfalls.
Okay, so thinking about these fundamental trade-offs highlighted in the material, speed versus differentiation, and this need for careful strategic customization on top of these platforms. What does this suggest to you about the future of building digital products, especially in really competitive areas like banking? Does it imply that maybe true game-changing innovation can only happen if you build absolutely everything from scratch? Or is there always a way to tailor and elevate existing solutions, like white label, if you just apply the right strategy and the right expertise? Definitely something for you, the listener, to chew on as you interact with financial apps in your own life.
Indeed. And it really shows the value of these deep dives, doesn't it? Getting into the source material reveals all the layers of complexity behind what might look like simple choices on the surface. It's rarely just one decision, but a whole chain of strategic ones.
Absolutely. Loads to think about there regarding how these digital tools get made and what really makes them connect with users in a crowded space. Thanks for joining us for this deep dive into white label banking platforms.